if you look at the patterns of basically what's going on, it's like
Mhm.
inflation is actually not a giving like money people problem or printing money problem. It's a social security problem and it's a Medicare problem.
Yeah.
And like we have the richest generation ever of baby boomers. And regardless which side of the aisle you're on, you're like trying to save your money and take your social security so you can give it to your children, but you're taking it from your children and making it more unaffordable for your children.
Welcome back to the Massive Passive Cash Flow Podcast. I'm Gary Wilson, your host. I'm glad to have you back listening to the show or watching if that's what you're doing. Either way is okay. We got a great guest today, Mark Anderson, and we were just talking a little bit. So we're going to give you some more insight on raising capital and how you can participate. But before we jump into the meat and potatoes, I want you to get the meat, Mark, a little bit. So, Mark, first off, thanks for doing this, man. I know you're a busy guy, and I appreciate you taking your valuable time and energy to share with us. So, welcome aboard.
Glad to be here. Always appreciate chatting with other people, and it's nice to be able to connect with capital raisers and investors digitally because I know you may not have them as your neighbor, so it's always good to have a community around that.
Absolutely, it's great too. The networking is phenomenal, and I mean, it's funny because we really don't make money doing this. I mean, indirectly, you can make the case, obviously, but they're really it's like taking radio into the future, and it's so accessible and it's free for the consumer. So and for us, I get to meet you. I mean, I wouldn't have went for the podcast. We never had this opportunity. So I think it's a wonderful thing. And for the listeners, definitely this is one you're going to want to take some notes on. If you're driving, don't worry. You can always come back to it later and take notes, or we're going to put as much as we can in the show notes. So you'll have that to fall back on. But really just the main thing is just, don't let yourself be interrupted because you're going to want to pay attention to this one. So let's go ahead and start at the beginning, Mark, if you don't mind. Most of us started off doing something different than what we're doing now. And I know you're just like me, same thing. I started off working in banking and computers. I mean, that's just a far stretch from what I'm doing now with real estate. But I understand you started off in construction. Is that right? Mhm.
Correct. I was a construction superintendent out in the Bay Area, so went to kind of a regular state school, got an engineering degree, and then went directly into construction. Did the whole like blue collar 60 hours days. Wasn't really working physically with my hands, but definitely leading work on site and being out in the sun when it was like 100 in Texas and all of that as well.
Oh man, yeah, I know the Bay Area is not all that bad. When you go more like towards Tracy and Stockton and Sacramento, it's weird. It just gets hotter and hotter in the
Yeah.
middle part of the state. Um, but what was the tipping point, or what was the transition? How did you actually go from construction? And by the way, were you doing more residential, or was it more commercial, industrial, or
I was predominantly doing healthcare work, which is referred to as OSHPOD in the Bay Area. So basically, it was like within a hospital, they'd install a new MRI. So we contain that area and then basically do all the site upgrades so that they're able to do that within an operational hospital. So relatively essential infrastructure and engineering for the most part. And basically, the Bay Area is obviously expensive and wages are very, very high. So I was fortunate enough with subsidized state school in California to not have student debt. And then I was just kind of commuting for 3-ish hours a day and started listening to podcasts like these and started to become obsessed with investing. Then started to dip my toes into multifamily house hacking and such,
okay?
across geographical areas from making a San Francisco salary and buying in Austin. Obviously aged well, but I did not like that much.
Yeah.
I have some gripes with real estate and just the amount of debt that you got on. So I was always familiar with basically options and such, and then started to get more and more in that. Surpassed my salary at work, basically got me to complete financial freedom. And then after doing that for a couple months of just like being on a boat during the day, I figured there was more to life than that. So then got really
Mhm.
into Tony Robbins stuff, ended up becoming a captain and a coach and volunteering at events there, and then opened up my own hedge fund here in October recently. So that's currently where I'm at now.
Okay. So back in the beginning, was it where you were actually investing yourself directly, like you buy a 3 or 4 bedroom house, rent out the other rooms to 2 or 3 other guys? Is that was sort of the model?
Yeah, take on as much debt as humanly possible, financed by the
Yeah.
government, And then
Mm,
I actually got really kind of into Section 8 housing for a little bit because
mm,
I think this is kind of a concept that more people need to pay attention to is the market is very efficient for returns and basically everything across that. And
mm,
almost all inefficiencies are created by the United States government. So if you want to make money, it should be around something with the government. Like the example I'll give is Amazon cannot deliver packages to you without losing money, but by them only taking the profitable routes and using USPS for the rest of the routes that lose money, they can basically break even. And the same thing happens with real estate, that residentially, the government will finance your debt to move into houses with basically no money down and take into account the rent of the other tenants. And then also, if you get a Section 8 voucher, whatever area code you're in, the government will pay 15% more. You don't have to fix up the place. It just has to be smoke alarms and safe, and you get filed and do all that stuff. So you can basically just create cash flow out of thin air through the efficiencies of the government.
mm.
And that's still basically what I'm doing today in the hedge fund space, except it's just much easier and much larger and much less drag. So that's where I think
Yeah,
everyone should follow for the money.
yeah. Well, and also when it comes to the housing industry in general, at least in the residential role, generally speaking, there's a shortage of housing across the country. And now it's not even like a hot topic because everybody it's obvious. I mean, we have more people than we have houses. So there should be incentives or should be programs to encourage developers and builders and investors alike to provide more housing. Theoretically, it should be affordable housing because the shortage is not like in luxury homes. I mean, although the builders want to build more luxury homes, obviously they make more money doing that. The greater part of the need is down in the affordable housing part. So I know the Bay Area has I don't know if they still do it today, but last year they rolled out a great program for builders and investors to either build new space or repurpose existing space into affordable housing. And then the government, the state of California would pay 100% of the rent. You know, I mean, there were some trade-offs because you got to be aware, just like anything in life, you got to look at the upside potential and the downside risk. But at least it was one way to address the need, you know. So moving forward, uh, was it a gradual thing where you started moving into capital raisers, or what was kind of take us down that journey if you don't mind a little bit?
Yeah, I mean, the thing with real estate is, I did it right. I bought multifamilies, they cash flowed. I put little money down and it all panned out. I had a big cash board. But at the end of the day, if you're like investing in your individual real estate and you're not doing a
Mhm.
value add, which with itself come with its own risk,
Mhm.
um, I currently today with the risk-free yield being at 6%, you're just gambling. It's effectively pointless. So I really don't think there's any meat on the bone for individual
Right.
investors in the real estate space whatsoever without huge amounts of risk. Um,
Yeah.
People can just get away with that risk because real estate's on a longer term debt cycle. So, you know,
Right.
we've been in a little turmoil for probably like 2-ish years. Some AI speculation probably bailed out the real estate market a little bit, but it's like
Yep.
if you're trying to do a flip right now, sure, the market could stay stable for 8 months, 12 months, 24 months. But eventually, this debt cycle from 2008 is going to roll over, and like people are going to lose their shirts on
Mhm.
real estate. And then also, like, I think the real estate agent thing is like kind of criminal. That's also needs to be broken up. It's like, how can I put 20% of my down payment down? And that's like a huge portion of my net worth. And then if I sell it within 5 years, if it didn't go up, I just took the risk of owning it for 5 years and I give up like 30% of my gain to some agent that like holds insurance. So
Mhm.
yeah, I mean, I would be open to like syndication of real estate just for the tax benefit. But I think that America and speculation has just gone to a point where residential real estate is not a wise investment. So therefore,
Yeah.
I prioritize liquidity. Because the other thing too is people are like, there's so many fallacies in real estate where people are like, oh, it's going to beat inflation. It's like, yeah, that's true, but you're paying like 6% debt service. You hold like a lot of risk within holding the house. You have to pay a massive commission to get out of it. And also, it's not liquid. So anything that's not liquid, like if I own a treasury yield in a high yield savings account. I get 6%. It's liquid and has no risk. So if I'm making 10% in an investment, not including commissions and fees and risk, that's not liquid, that doesn't even remotely pan out. And I see a lot of poor advertising by private equity firms and basically like real estate funds or debt funds that are very misleading as well. Yeah. So I like what I do because it's liquid. All the options are 0 days to expiration options, which settle at end of day. So they always come into cash. It's 100% liquid. And then it's not a voting mechanism. Like stocks and real estates are voting mechanisms. If you get $5,000 from a home per month rent, they say it's like a 2 cap. It's like, obviously that doesn't work out, debt wise. You're just planning on appreciation in a multiple, whereas that's not the case when you're realizing things and it's liquid at end of day.
Yeah. Yeah. Well, it's interesting. You brought up a really critical point. And when the pandemic hit, the government was basically handing out money. That's essentially what it was. And it wasn't just one round. It was 2 or 3 rounds. And when you add up all the welfare,
and then people made money on speculating on that money, which pushed it up. Yep. And then all of a sudden people had money from money because it was going around. So yeah.
Yep. Oh yeah. It was actually insane. I'm not like a total anti-government kind of person. I think the government's gotten too big, but other than that, we do need regulation and things like that. The problem is they didn't know when to stop. They should have stopped earlier because they created the inflation that we've been experiencing. The prices of homes went up dramatically in a short period of time, like a couple of years. And then, of course, they had to raise the interest rates on the cost of money. So the cost of borrowing went up. So literally, and this is an actual statistic anybody can bear out in any market. If you took the average house you bought in 2020, the 3-bedroom, 2-bathroom ranch, for example, let's just call it that, in that neighborhood, and then you factored in the cost of the money, like what you're paying on your mortgage payment, right? Interest and principal. And then you went to 2024 and bought the same exact house at the new price with the new interest rates, the monthly outlay would be exactly double. I mean, it's double the housing cost in less than 4 years.
And again, it's just an inefficiency. Like the only reason real estate is valued at this is because it's the 1031 exchange and because we don't have variable rate mortgages if you choose not to. So they're just all inefficiencies causing it. And the funny part about all this stuff is, if you look at the patterns of basically what's going on, it's like inflation is actually not a giving like money people problem or printing money problem. It's a Social Security problem and it's a Medicare problem. Yeah. And like we have the richest generation ever of baby boomers. And regardless which side of the aisle you're on, you're like trying to save your money and take your Social Security so you can give it to your children, but you're taking it from your children and making it more unaffordable for your children to basically live. So it's like you're basically just using the government to, inflate away whatever it is. So these things will continue to happen. And people think in America we're immune because we're America, but you can already see the canaries in the coal mines across the world. It's like the Japanese Nikkei, which stock exchange was down 20% in 2 days because they've been QEing since the 1980s and they finally had to raise rates because they had inflation, which blew up their stock market. Yeah. It's like Australia and Canada have massive housing problems because the government basically said you can own a house and you can lose money, but you'll make money on taxes, which then encourages bad actors to trade monkey JPEGs and build real estate when they don't actually have a skill. And once this unwinds or the laws change, all of a sudden it no longer works.
Right. Oh yeah. Well, that's the problem with their philosophy is that it's all well, I know we're getting way off track here, but they're using Keynesian economics, and a lot of people are like really touting it because it works, but it doesn't really work. All it does is prolong the inevitable and keep kicking the can down the field. You can't keep going forever because eventually the people who actually do control the money, they're going to say, okay, well now it's no longer a beneficial game for us because we have debt that people can't pay. And then the game changes and it's going to be disastrous because it's been going on for way too long. But one thing I want to point out there, so what we're doing is this. we're not really getting into the traditional rental game anymore. We're not renting out
Yeah.
two-bedroom apartments to people for 1,500 a month. We're not even doing short-term rentals. I mean, we do have some, but really where we're going, and I know people are going to tell me, I'm going to hear it now. Don't tell more people about this. Stop telling people, but we're doing midterm rentals, greater than a month, less than a year. Typically twice the prevailing rates. You got upside potential, you know, tremendous upside potential and minimal downside risk because most of the legislation nationally is now more pro tenant and less pro owner. And then the short term rentals are getting pushed back from the localities. They're the ones pushing back on the Airbnbs and so forth. But the business traveler, the traveling nurse, traveling doctor, traveling manager, executive, whatever, that's unaffected. That market is almost being unaffected. It's a great income potential. And house hacking falls into that category too, by the way. So we're having a lot of success with that. We're just like, you know what, we're not going to play that game. We're going to play this game. And so far it's being left alone. I mean, so at least for right now, that's been our answer to our clients. But I want to jump back to your shift in strategy going into the capital raises. So if you could give people like a one-on-one level, what does that actually mean? Because I want, especially like business owners, like dentists that are busy. Think about it. They got three practices. They barely have enough time to eat and sleep during the day. They're making money. They don't have time like you and I do. Their expertise is not real estate. Their expertise is dental care. And yet I think they can participate in this. I mean, if they've got the capital and lack the time, but sorry to prolong that, just the question. But the question is, can you give everybody like a basic one-on-one level of what it is you do now? And then maybe we can give them some like an example or a case study. And we can go from there. Did you know that you can participate in class every Monday? We call it Monday Night Live, 7 p.m. Eastern, with me and dozens of other investor agents from around the country, in fact, the world. Every Monday, totally free. No selling, no recruiting, just straight up education on anything and everything in real estate. And we have a lot of good guests coming on once or twice a month, bringing in expertise on subjects like how to buy a house with crypto. Okay. How about them apples? What about AI? How's AI affecting our business? How about the metaverse, blockchain processing? We're already using it in title work. So come on to Monday Night Live. Be ready to take notes and ask questions because it's live and engaging, and you get to participate by asking questions and meeting others. So we'll see you there. Go to realestatewithgarywilson.com, click on the resource tab, drop down, and you'll see Monday Night Live. And in there, you can see one of the most recent classes. But more importantly, you can register for class as many as you want going up to like the end of the year, I believe. So in any case, do that. We'll see you on Monday Night Live. Look forward to meeting you in person. Take care.
Yeah, basically what I am doing now is I am doing what people would call statistical arbitrage. So basically it's just mathematical truths that create an edge effectively out of thin air, as well as leveraging government inefficiencies and lobbying from Wall Street that also, create excess returns and such. So at the initial level is within hedge funds, you're allowed to margin the risk-free rate of a treasury exactly like a bank. So if I have a $10 million fund, I can have $10 million in 12-week treasuries with no interest rate risk. So you're making a 5.5% risk-free yield. And then the government will let you use all $10 million of that to in turn then do the statistical arbitrage on options. Then also on top of that, if you're trading S&P 500 options, there's what's called the 1256 tax advantage, which means that 60% of all the money you make is taxed at the long-term capital gains rate, 40% is taxed at the short-term capital gains rate. So you're just layering on edge effectively out of thin air through lobbying. And basically what I am doing is the market opens every day at 9:30 and closes every day at 4 p.m. Eastern. So basically we're carrying no risk overnight. The market was just down like 3.5% overnight. Then we place these statistical math equation options on at 9:30. If something happens during the day, there's a resting order with the broker. We can basically instantly get out and manage our risk. Then at 4 p.m., everything is cash once again. So if China were to blow up Taiwan, nothing would happen to us basically over the course of the night. So this is basically taking the advantages of, stocks liquidity and juicing that up to the nth most extent, which also brings in what I call geometric compounding. So we know a huge benefit of real estate is compounding. If you've ever been in credit card debt, that is what's called geometric compounding. The interest is assessed daily. So the example I like to give is if you had $10 million and you took a 10 basis point daily return, which would be $10,000, and you added that to it every single day for 2 years, you would return 125%. If you took that same $10 million and multiplied that by 10 basis points and compounded 10 basis points each day of interest, you'd end up with a 256% return. So basically, just through that higher time velocity of money and inefficiency, we basically have created that, through our fund. And the reason we can do this and not other people is that this market is relatively new. You could probably do, 100 million in it or so. And for a Wall Street hedge fund that's billions of dollars, some large conglomerate, they would not be able, it'd be a statistical rounding error for them to make money on that. So what I would say is we're a tractor supply company in a town that's too small for a Walmart.
Yeah. Okay. So now is this for someone to participate? Well, take us through the flow. If someone was to reach out to you, you know, email, go to the website, find you on YouTube, that kind of thing, or LinkedIn. What's the process for engaging with you? Or is there a vetting process? Like, a lot of investments with big dollars, you have to be a accredited investor, and those rules have changed in the last, generation too.
Yeah.
And they're talking about doing away with that. I'm thinking, I get it. It doesn't sound fair to people who don't qualify, but there's a reason for that. The people that qualify generally have demonstrated, a certain level of sophistication when it comes to money.
Yeah.
But take us through the process of engagement. What does that look like? Somebody wants to learn more about this and participate.
Yeah, I mean, obviously, what I say is I give away the secrets and sell the implementation. So if you were to look me up, there's all the information that you would need to basically do what I do, except emotionally, you would probably not be able to follow through because you didn't do the work or you wouldn't understand it. So basically,
Right.
you could just stalk me online and determine if you're interested. And then it's very easy to just book a call with me via LinkedIn, YouTube, or my website. Then we could chat. I'd, bring down to something that you understand, whether that be like cars, insurance, whatever you do for a living, to kind of explain the process around that. And my main thing is I kind of just provide a 90-day benchmark because, again, since we're creating so many occurrences over a low period of time, 10% return every 90 days, complete liquidity, no lockup fee, no early withdrawal fee. So, you can keep track of my performance over a period of time. We're SEC audited. So it's as legit as Apple earnings or, NVIDIA's price or whatever. And then if I hit my target, you obviously know I'm selling what I'm cooking. And then that's basically my offer in regards to it. And I have additional resources and whatever that interests people. It's mostly people that are just a little more familiar with options. Kind of what I would say is if you've bought in stock before, that would be like buying a house in your local municipality. And then getting in a hedge fund like this would probably be like buying real estate in a different state. So it could be a little scary at the beginning, but I often kind of work with people on what works for them to take a bite out of it so they can just see and feel
Mhm.
what the fund's actually like. But the main thing is liquidity. So it's like you can get your risk-free yield of a high yield savings account, as well as additional yield from uncorrelated volatility premium, which is a bit up now because the market is in turmoil. So that's better for us and
Yeah.
it's uncorrelated. So that's the main appeal of what it is. I like to say income is the outcome, and on a short-term basis, like quarterly.
Yeah. What's funny is just a side note. I was actually up in Quebec City. I went there last Wednesday for a big festival. I was there Thursday, Friday, Saturday. Came back yesterday, and we were looking. I just happened to glance at something on Friday, and I said, "There's something going on. There's some big drops going on." And everybody's
Yeah.
like, "Nah, don't worry about it." And I'm like, "Well, okay." And at first I bought it, and then I realized there is something. I don't know what the news was or what triggered it, but it looks like it actually started late last week. And then, of course, you mentioned today. It's now it's like everybody's waking up. So I don't know what that is, but I can tell you this. Um, I know for someone like me, I mean, I'm literally, I love what I do, but it keeps me very busy because I've got people all over the country that I serve and on my team, and they serve people in 13 different countries now. I just don't have the time to look at everything, look at the data, do the analysis, and make decisions and things like that. That's why someone like me loves meeting guys like you, because I know I could take what I make in my business, invest it, wisely, and get a much better return than just going into an index fund, or even taking my own chances with individual stocks. That's just you have to you have to have time and the tools to look at those things on a regular basis. Real estate's always been easy because it's such a slow moving commodity. I mean, even if
Yeah.
you make a mistake in a piece of real estate, you can correct it. You can modify the building. You can change your
Yeah.
tenants. You can change the exit strategy. But stuff like this, you could go to bed one night, be on top of the world, wake up the next day, and it's like, holy crap. That's why we'd rather have someone like you that we can, learn, get to meet and learn about and participate more passively. So is that really what this is? Like for me, I understand trading because I've studied it. I just don't do it. I haven't done it. So what you're doing is you can take funds from someone like me or a group of people like me. Um, and by the way, are there any limits, any you know, how the minimum amounts to put in, the maximum amounts, things like that we didn't know about, or and as what I just described, pretty much like I'm a good avatar. So so talk about that. Like who is your typical avatar? Who the dentist, the engineer, teacher, or somebody like it's a business owner.
Yeah, so I'd say it's predominantly professionals, kind of
Mhm.
around, honestly, a lot of international people as well. It seems like people have less access to investments outside of the United States. So,
Mhm.
really liquid, well regulated sectors such as, hedge funds seem to be attractive to that. But
Mhm.
for the most part, it's people that like don't want any more BS. You know what I'm saying? It's like we all know whatever VCs are holding on their books are a lie. They're just bid up by accounting firms. We
Right.
know that real estate's on a longer term cycle. So some really large fund that they're
Yep.
building and buying right now may not be that attractive in the future. And we know that multiples are speculated up within stocks. So not that Apple and Tesla and Nvidia aren't profitable, but we're paying more than we've ever paid for a dollar of profit. And they could continue to make profit and it could not go with us because it's a speculating mechanism. So
Yeah.
it's really people that just don't want any BS. They know it's safe and liquid so they can do what they want with it. And they mainly want to try it, or they've been in another fund and they're like, hey, this isn't private equity where it's locked up for a period of time.
Mhm.
There's no cap on, my upside of what this can be. There's no lockup. There's no early withdrawal. So
Mhm.
it's basically that kind of different sector. And the way I would also kind of explain it is it's like, I'm basically selling hurricane insurance in Florida, but I get to check the weather every day at 9:30 before I decide if I sell the hurricane insurance or not. Because that's
Yeah.
exactly, essentially basically what we're doing. But I still do buy like global homeowners insurance for,
Mhm.
if there's something unforeseen. So like, and the other thing too is like what's occurred recently is it's like, I don't care what you own, it's down.
Mhm.
Like I think since July 10, the Nasdaq's down like 18%,
Yep.
or something. And then it's like I'm basically at break even. And now that we're in high volatility, this is obviously going to be very good for equity risk premium. But
Yeah.
yeah, it's basically just people looking for something else. They may have been in real estate or are trying something else, and the alignment and offer is just very much on your behalf and my behalf, like makes sense. I'm not some rich New York City guy. So that's predominantly who's partaking in this and interested in it.
Yeah. Well, I appreciate that, I'm just curious too, and I'm sure a lot of other people are listening will be curious. Um, what's the like to build a hedge fund? I mean, is this something you're actually? I think you have to register with the SEC. Is it well, like what's the infrastructure of raising a capital and building a hedge fund? I mean, it sounds like, and is this your first one? Kind of tell us about what that. If someone was to start off doing what you've done, what does that process look like?
It's actually honestly pretty simple. one
Mhm.
thing I would kind of compare it to is, if you were to look at real estate, it's just a lot slower. Like
Mhm.
changes, there's a lot of laws and rules and regulations to basically provide guardrails. Whereas there's been such a democratization of technology and data in the last two
Mhm.
to 3 years. But there's not like huge amounts of guardrails on what you can and cannot do as a hedge fund. So now, since you can get that data and information and computer software so quickly, and you can have robo lawyers that basically file all your stuff, the cost of running a hedge fund has probably gone down by like 1,000% in the last decade, basically.
Okay.
So you basically just file two businesses. One's the managing entity, and one is the actual entity of the fund. Then you file a PPM and Form D with the SEC, and you open up a brokerage account. So within 3 days and like 40 grand, you can basically be opened and having a hedge fund. It's not that difficult. The more difficult thing would be like raising capital, and also what I'm doing, since it's only in the S&P 500. So we can't have a CEO that like sleeps with their secretary and it blows up the stock, or one law
Yeah.
changes like what happened in 2020. Like if the laws change that really hurt oil companies in 2020, they help tech companies. So they sell the oil companies and buy the tech companies, and vice versa, basically throughout time. So it would be, the main thing is raising capital. And then also like, is your strategy and fund something that is scalable, large, and safe, or are you just like the smart whiz kid? Because what I like to say is like, there's a difference between being talented and then actually being good. So like if you're 7 feet tall and you play basketball, you don't actually need to
Mhm.
be good at basketball. You're just talented. Whereas if you're, 6 foot and you played in the NBA, you're probably going to be a really good coach because you have to know a lot about basketball if you're not an athletic freak.
Yeah.
So it's kind of the route that you're trying to go that in. It's like you could probably buy land in Africa that's got a huge margin on it, but it'd be hard to raise capital because it's uncertain and not proven, you know?
Yeah. Yeah. Hey, by the way, I mentioned earlier YouTube channels. The YouTube channel is 0 day mark.
Yeah.
And is it what's on there? What can be, is it educational or, um, and what can people find on there?
Yeah, I've got two long form presentation that's kind of like will scare you what's going on with like regular investing, and then introducing 0 days to expiration S&P options,
Okay.
and basically what that looks like in my strategies, as well as showing some math stuff around it, why it works. And then
Hmm.
in addition to that, I have a lot of Q&A stuff on there, as well as one of the guys that I used to work with that does some stuff on LinkedIn for me. He's got a job and a kid, and within like 5 hours a week, I'm basically teaching him how to trade options with like a 50 grand account. So that's kind of like a fun thing people could look at if they want to understand it
Yeah.
a little more slowly. And then if you're really interested, I also run a zero DT options group on like LinkedIn, so I can add you to that. But basically, like I said, I'm just putting out all the information and happy to share it with people, because the real thing is implementation. The thing I like to
Yeah.
say is, people are like, oh my God, how do you beat the market? Don't you know 99% of people don't beat the market? Or how is this possible? And it's like, well, 99.9% of people also don't have six packs. But when we see someone with a six pack, we don't go up to them and look at them and say, how is this possible? Don't you know the average American has a body fat of 30%? Where the answers of how to get a six pack, I think anyone can answer. It's like, you have to eat healthy, you have to sleep well, you have to work out consistently every day. And the same exact thing goes for like
Hmm.
responsible investing. The time frame is just squeezed down with these compounding 0 DT options, to where we're able to get that benefit faster and more so.
Yeah. If you don't mind me asking, what S&P 500, that's where that's the sandlot that you're in. Well, what about the other, like NASDAQ, the Dow's, is something about S&P that just um makes it easier or more predictable?
It is the most liquid, and the commissions and fees are the lowest. So
Gotcha.
basically, what I see a lot of people will do is they will like diversify for diversify's sake, to like try and
Hmm.
make them feel good, whereas they're not actually diversified. So like if you were to participate in the NASDAQ, it's like when it gets bad, it's going to be correlated. So like it basically
Yeah.
just doesn't matter, like because it's a liquidity event. It's like oil's down, the yen's down, Bitcoin's down, gold's down, the NASDAQ's down, Russell's. It's like that's just basically how it works. So why would you participate in something else that you're paying like 10% more commissions and fees to get in and out of,
Right.
comparative to other things? Because if something were to blow up and you want that liquidity and that small spread to go in, you want to
Yeah.
be, in what's the largest and the biggest, which is the SPX.
Yeah. Gotcha. And by the way, the website too, mbhcapitalmanagement.com.
Yeah.
What's how's that? What can people find there? Is there like an opt-in form or other like material they can get
Yeah,
in
yeah. You
regards to
could sign
Bitcoin?
up for my newsletter. Like kind of send
Mhm.
out a little Warren Buffett newsletter to everyone at the end of month. And then
Mhm.
it's mainly just a fancier looking landing page. Getting on a call with me or watching my YouTube videos kind of going to be
Mhm.
some more beneficial stuff probably for you to learn. But yeah, it's just a better looking landing page of what that looks like and
Yeah.
all that resources. So that's kind of what more my website is for.
Okay. So everybody, if you're not driving, write that down. mbhcapitalmanagement.com. And then the YouTube is 0 day Mark. Okay. And then and Mark, how about the LinkedIn handle? What's that handle?
It's Mark Anderson, which is like the most generic name on LinkedIn. So if you type in Mark
Yeah.
Anderson, MBH Capital Management, it'll pop up. Or if you
Okay.
get to the MBH Capital page, you could find my name on there. I have a relatively large following, not the number one Mark Anderson, but if you type in Mark Anderson Hedge
Yeah.
Fund, MBH Capital Management,
Yeah.
all pop up in the search function.
Well, I think they group you and I together in some big group because Gary Wilson is the same. There's like multiple Gary Wilsons, and
Yeah.
they're one of them. By the way, it took me years to surpass him on searchability because people would search it. Hey, Gary, did you play music? I'm like, I couldn't carry a tune in a bucket. Is it
Yeah.
great? Because the other Gary Wilson is not what we expected. And I'll just leave it there. But in any case, I mean, I like the fact that you're on YouTube and LinkedIn has definitely been growing a lot in stature, and particularly the millennial group. I mean, the millennial uh, demographic is all over LinkedIn, and we've been having a lot of success with it. I love YouTube too because it's basically like a community. It's education based, it's community oriented. You can learn. One thing can lead to another, but it's a positive place to be and a great way to educate yourself. So, and I know we're probably getting really short on time. I know we've passed the magical half-hour mark that people tell us about, but I love the subject, man. I hope everybody listening and pay attention. Please reach out to Mark. Mark, if anything else you want to share, words of wisdom, contact information before we sign off here. Mhm.
No, I just love to speak anyone one on one or just in general. Like my favorite things to do are make more money, give less money to the government paid in taxes, and then give my money philanthropically to causes that you care about. So I think those are the
Yeah,
three most important things. And there's a lot people can learn with kind of getting out of certain types of investments. Like the way I would say is your investment should be kind of like a stool. One should basically have no risk and be liquid, which is cash or treasuries. One should be like a longer term thing that, is going to be stable and doesn't really get bid up or down, which that could be real estate. Then something
hmm
should be basically like liquid and antiquated that can actually provide, basically returns. That's kind of like the holy grail, which maybe private equity, maybe what I'm doing or whatever fits you. So I would
yeah,
just encourage people to kind of like drink deeper from different types of asset classes. Even if you may not know where they are, it's worth to look into it and have an understanding of it. And then I always
yeah,
think people should kind of look at stuff for probably 90 days before you ever do anything and just be very cautious of, sales type people out
yeah.
there. If I could share a quick story too. Like
Sure, yeah, go for it.
someone that was like investing my fund had reached out to me to look at a real estate investment, and they were a private equity firm that had kind of showcased themselves as um, like they would buy distressed real estate debt, residential and commercial, and then they offered
Mhm.
themselves like a 10% preferred return with a 3-year lockup. And being a fund manager, I could easily I thought it was kind of weird. I think they were advertising on bigger pockets and they were only requiring like a 50 grand minimum. And when I looked at it in more detail and I inbounded to their sales guy, they may have offered a 10% preferred return, but they didn't list how much of, they had in the game, like how much of the fund they actually had their money in. And then there was no catch up, no anything. So if they made a 250% return over those 3 years, you just got 10% annually and they took the 250% upside. And it's like, frankly, I don't care what their track record is. They weren't around pre-08. And someone that's incentivized like that, you just know they're taking a bunch of risks because they're incentivized too. So I would just really encourage people to like be careful on the Instagram-y internet advertising people, and then be more judicious when you come to private investments because they are not as regulated because you're deemed to be sophisticated. And it's fascinating, the capital game, what people do. And it's like, if they were to go under on that fund, they would literally just start a new fund under a different name and say, we have 10 years of experience doing $200 million of capital. And that's, what most people do.
Yeah. Yeah, I know there's so much. I mean, the speed of innovation and technological development, it just continues to increase. It doesn't ebb and flow. It's been increasing since the industrial age, and it's just picking up speed
Yeah.
even faster now with AI and the crypto world. And I learn about all that stuff, and so I've got a little bit in the crypto world, and now AI. You know, just remember, guys, there's you know do the homework. If someone like Mark who has a website, has got a YouTube channel, you know how to get a hold of him. He's a real live person on our podcast. You're not getting. I mean, I've seen people they would show me things where you don't even get to see the person that you're supposedly giving your money to. There's like an avatar kind of thing, like a you know animated or AI developed caricature. I'm like, wait a minute, I want to see the actual person. I want to know their name and how much money do they have into it to themselves, and can they show us the actual traffic? Can we go online and watch it and see it? Just like you can see on Fidelity or Vanguard. And if there's if all three of those things are there, I just say no because I'm not taking that kind of a risk.
Yeah.
I've been, I mean, but I'm not stuck on real estate either. I love the fact that we have multiple disciplines on this podcast because I want people to have multiple streams of income and learn because you can sometimes integrate two or more of these approaches and philosophies together. I mean, you can now buy or have been able to buy real estate with crypto, and you can also buy fractional shares of real estate where it's the actual direct ownership, unlike a REIT. A REIT, guys, is indirect. A REIT is where you buy shares of a fund and the fund buys real estate. Fractional ownership, you actually directly own a piece, just like some shares of stock, but it's shares of a property. So you have the ability to get in and out, right? Just like you were describing, Mark. You can get in and get out. Some of these other ones, you're locked in there. Just be careful. Do the vetting. You've got like here with Mark, you've got at least three ways to check things out. So in any case, Mark, I know we're getting way over time here, but I appreciate you sharing that story, and I appreciate you sharing all that you did on the podcast here. And everybody, I'm going to repeat these one more time. So it's mbhcapitalmanagement.com. Okay. In 0-day Mark, right, for the YouTube channel.
Mm-hmm.
And on LinkedIn, just like with me and my name, you just got to search, Mark Anderson and look for MBH, Capital. And you should be able to find them. So I appreciate you listening, Mark. I appreciate you delivering the gold today. And for everybody, God bless you and your loved ones. And we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.